This is a big pivot. So Japan is rich, Japan creates value, and now has a new generation of young leaders who are ambitious, who want to create their own legacy. We are actually seeing a generational change. The Showa generation, the baby boom generation, finally is being kicked out. And let me give you the numbers.
So Jesper, Koll, welcome to the show.
Thank you for having me.
So you're an economist and you have been living in Japan since the 1980s. You quickly become the leading top economist of Japan, and you served as chief economist for U.S. investment bank JP Morgan and Merrill Lynch. And you run a Substack called Japan Optimist.
Right.
So you are a Japan optimist.
Yes.
Okay. And why is that?
Look, the reason is very, very simple. Japan is number one, the world's richest country. If you look at the international position, you find that for 38 years running, every year, Japan is the biggest creditor country in the world. So constantly, the combination of Japanese corporations and the Japanese people, they are constantly generating a surplus, which then gets reinvested in the world. And many people don't know this, but for example, on Wall Street, the Japanese National Pension Fund, the GPIF, is actually the single largest investor in American companies. It's not BlackRock, it's not State Street. It is actually the Japanese National Pension Fund. So the number one reason is that Japan is a surplus generator, constantly creates value. I think, the second reason why you should be investing in Japan is that Japan is actually creating real corporate value. And what do I mean by that? As you know, a stock price is dependent, number one, on the profitability, on the earnings generated by the company, and then it's by the price-earnings ratio, so the valuation, And what is very interesting, actually, when you only look at earnings, when you only look at corporate profitability, you actually find that Japanese CEOs, that Japanese companies do generate much, much more value, much, much more profit than, for example, their counterparts in the United States of America, which is very, very interesting. And we can talk a little bit more in detail about that. So number one, Japan is rich, a generator of surplus. Number two, Japan creates real economic value. And then I think the third reason is more important in 2024, more important right now, which is that we are actually seeing a generational change. The Showa generation, the baby boom generation, finally is being kicked out, or rather, this is Japan, everybody's nice. They are retiring. And as a result of that, you find that a younger generation is actually taking over. And let me give you the numbers. When you look at the companies listed on the Japanese stock exchange, you find that over the last year and a half, the age of the newly appointed CEO has dropped from 69 down to 52, which is tremendous. So that generational change, you now have got a new generation of Japanese in leadership positions. And like yourself, you're an entrepreneur.
So this is a pivot, yes.
This is a big pivot. So Japan is rich, Japan creates value, and now has a new generation of young leaders who are ambitious, who want to create their own legacy. And that's why I think Japan is a fantastic place to actually invest.
Interesting. And you're also arguing that the elites are changing. Instead of going to the government, they leave the government, and you're saying they go to somewhere else? This is very, very important because, for an economist, right? You want to talk about economic growth and all of these things, but the bigger question is, well, where does economic growth come from? And economic growth actually always comes from people.
It is the ambition, it is what Adam Smith, the great, founder of economics, what he called animal spirits. Why do you get up in the morning and want to do something? And so human capital, right? The interesting thing is that human capital in Japan is actually beginning to move. You find that the number of job changers is actually accelerating very, very fast. So it's not just the salaryman, lifetime employment, stay safe and stable in just one company. You now find that Japan's elite is actually changing jobs. And you can look at the data, and we've got the slide here of, when you look at the elite from the Ministry of Finance, from the Ministry of the Economy, so the elite bureaucracies, which, as you know, has a very high status.
Yes, in Japan, yeah. Let's look at the slide.
Let's look at the slide, because, the facts just speak.
Yes.
This looks at the elite, the bureaucrats at the Ministry of Finance, at the Ministry of the Economy. These are the elite, very prestigious
jobs, yes.
Exactly.
Your family's happy if your son or daughter joins.
Yeah, and these are the young men and women who get to marry. Yeah, the best people there. But it's interesting. How many of these young men and women they enter after 4 years of university, right? How many of them quit while they're in their 20s or in their 30s? And you see that it was a flat line, absolutely boring, no movement. But over the last 5-6 years, this has started to shoot up.
Wow.
And that tells you that the liquidity, that what I call the metabolism of Japanese human capital is actually picking up. There's also, we did some work, with the Keidanren, the big business association, and you actually find that last year, in 2023, you find that of the leading companies, right, in the Nikkei 225 index, so Japan's top 225 companies,
yes,
all of them now hire more people mid-career than at the graduate intake.
Interesting.
And in the past, that used to be little less than 20%.
Right.
Now it's over 50%. And what's also interesting is that, the ambitious new generation, these job changers, you actually find that on average, the increase in pay that they get is around 12%, right? Which ironically is very similar to the data in the United States of America.
Wow.
So you've got this metabolism, amongst the most important force of economic growth, which is human capital, right? The ambitions of Japan's next generation is actually coming through, not just dreaming, but actually taking action, quitting that job at the prestigious Ministry of Finance, quitting that job at the prestigious Mitsubishi Corporation, and moving on to do something else.
To which field?
So what's interesting, right? When you look again at the elite and the bureaucracy, right? And people who join the bureaucracy, it's fair to say that they probably have a more conservative mindset. But what is interesting, of the people quitting the elite bureaucracy, you actually find that about 2/3 of them go to startups. So that tells you, I'm often asked, well, what's different? It's this famous phrase in economics or in finance, what's different this time? Of course, Japan is still Japan. Of course, Japan is still an aging population, right? Of course, in Japan, 1 in 4 is now over 70. 1 in 4 lives off a pension. That part is still very much the same, but the interesting new development is that the liquidity, the metabolism of Japanese human capital, the metabolism of Mr. and Mrs. Watanabe is actually starting to pick up. And that tells you that there's going to be future prosperity, there is going to be economic growth.
Wow, so this is very surprising even for a Japanese like me, because to add context to our international audience, so in Japan, maybe 5 or 10 years ago, you go to University of Tokyo, you graduate in your 20s, you join the Ministry of Finance or Toyota or something, and you stay there for lifetime. But that is changing, so why is that?
I think the reason is very, very simple, is that now the young generation, number one, doesn't want to take up with that gaman suru mentality.
Which means to endure.
To endure, to stay in your place, right? I mean, the sort of traditional employment system, particularly for large companies, is kind of like an escalator, right? You graduate from university, you join Mitsubishi Corporation, you join Sumitomo Corporation, you stand on the escalator, and it will carry you higher.
Automatically.
Right? Nenko joretsu. Right?
Which means that the senior is the...
Seniority-based system, right? Now, I did some analysis and actually found that in the 1960s, when Japan was this high growth, Japan was the growing superstar of the world economy. In the 1960s, if you joined a Japanese elite corporation, right, it took you about 13 years to become bucho. So to become general manager, which is a position of real responsibility, right? You report to an executive, right? So in the 1960s, it took 13 years. Over the last decade, on average, it takes about 24 years.
24.
And so what is happening here is that the young generation realizes that they are in short supply. They realize that the negotiating power is no longer with Mitsubishi Corporation. And sorry, I don't mean to pick on Mitsubishi.
As an example.
It's just an example. You can use Toyota, you can use Sony, any of the big companies, right? You find that now, when, the large corporations want to recruit people, they have to fight to actually attract those people. So, kaite no soba. Right? Or urite no soba, right? In this case, right?
And the young people don't want to stay there for like 20 years to become a general manager.
Yeah, and this is exactly where it gets interesting, right? Like loyalty to a company, is obviously a good thing and can be very, very rewarding.
Especially in Japan,
right? But it was interesting, throughout my, almost 40 years in Japan, right? I've had many, many discussions with, people of my age who had their sons or daughters, right? Graduating from university and getting different job offers, right? A friend of mine called me and said, hey, as you know, my son is graduating from MIT and he's got a job offer from an American company, from a German company, and from a Japanese company. Can you talk to him and give him some advice? And so I said, look, what do you want me to tell your son? Because if he joins the American company, if he's good and lucky, in 15 years' time, he can run the company.
So he'll become the CEO.
He can become the CEO. If he joins the German company, and he's good and lucky, in 15 years, he can run a region like Asia Pacific or Latin America or North America, right? If he joins the Japanese company and he's good and lucky, after 15 years, what's it going to be? Kacho?
Which is?
Like your section chief.
Section chief, yeah.
So again, the A team, right? In the past, with Japanese employment practices, the A team of the world, right, did not come to Japan, right? Now what is interesting, right? And this is a phenomenon really only 3 or 4 years old, right? You actually find that the Japanese younger generation is realizing that they've got the power, is realizing that, their manager is a senior, but he doesn't know how to use a Zoom call. He doesn't know how to use AI.
Or Slack or ChatGPT.
Exactly, right? He doesn't speak English, for example, right? And so the interesting thing is that, the demographic changes in Japan, the fact that the number of high school, the number of university graduates is declining every year by about 25,000 kids, actually creates a scarcity, creates a shortage, but that shortage empowers the young graduates.
Yes.
I mean, as you know, I always say, I want to be reborn as a 23-year-old Japanese.
Okay, you really think so?
Absolutely, which is again, it's just economics, right? I mean, people think of economics as this complicated thing. Well, no, economics is demand and supply. So the demand, do Japanese companies, right, whether it is Hitachi, whether it is Toyota, or whether it's small and medium-sized companies, or whether it's startup, do they want to be world-class competitors? Absolutely. So the demand for labor is there. But the supply, because of the demographics in Japan, is actually shrinking.
Right.
That means that the price of labor, that the bargaining power of labor is actually going up.
Yes.
So it's very, very interesting to see this development. You actually see capitalism coming to Japan.
So I hear that the Japanese young people are changing, they're gaining bargaining power, but how does it lead to Japanese economical growth, and how does it lead to the question, should the world invest in Japan?
So why you should invest in Japan comes back to this point about actual economic value being created. And let's just look at the data, right? You see here, Japanese companies are, the sales, the yellow line shows over the last generation, right? You see that sales, which is top line growth, right? Uriage, right?
Yes.
Has stayed flat.
Well, it's literally
nothing.
Nothing, okay.
Right? Which is the economic stagnation
yes.
that people talk about. The ushinowareta 30 nen,
yes,
right?
The lost 30 years.
The lost generation,
yes.
all this wonderful stuff, right? So sales were flat, but look at the red line, which is profits. Profits went up 11 times. This is amazing. Anybody who has ever run a company or analyzed a company, when your sales are stagnant or declining, eking out, making a profit is unbelievably difficult.
Right.
But the Japanese were able to do it in great style, in great fashion. And compare that to the American superstar CEO, right? Sales in America up around 3 times over 30 years, but profits up 6 times. Not bad. Not bad, but compared to Japan, actually corporate managers, actually the Japanese system of corporate leadership, right, is actually, empirically speaking, very, very good. I always say the Japanese managers deserve the Nobel Prize for applied economics, because this is quite incredible. You notice that the Japanese profits are up 11 times, but you do notice that there is a lot of volatility.
Yes, it's up and down.
It goes up and down, and you compare that to America, there's a little volatility, right, in profitability, but it's much, much lower.
Yes,
right?
It's basically just increasing.
During the global financial crisis in 2008, 2009, of course, American profits dropped a little bit, but Japanese profits collapsed.
Right.
So it's where Americans are very good at is actually smoothing out, creating consistency.
Interesting.
So in absolute terms, over the last 30 years, the Japanese have done a spectacular job, but managing the volatility is, I think, the next challenge for the generation. And I think, again, the value proposition is there. And if during the next global economic slowdown, Japanese managers can show that profits will go down a little bit, but not completely crater, not completely collapse. If they can show that, then the respect that the Japanese stock market, the respect that Japanese share prices will receive, is actually going to start to grow.
Well, let's talk about the superstar CEO, because in Japan, we don't have Elon Musk, we don't have Jeff Bezos, we don't have Steve Jobs, but do you think that's the strengths of Japan? Because you argue that Japan is a country which capitalism is actually working.
Yeah.
Do you think that's the strengths of Japan?
No, I think that is exactly the strengths from that Japan has, right? We can talk about some of the weaknesses maybe later on,
yes.
right? But one highlight that's very, very important, right, is when you actually look at, the performance has been very good, right, of the salaryman CEO.
Yes.
But what about the pay? And what we're doing here is we're comparing the CEO compensation relative to the average employee in the company. In the United States, the blue bar, you see that has always been higher than Japan.
Right. Especially after the 2000s.
But look at this, it's now 400 times. So in other words, the CEO earns in one day as much as the average employee earns in a year.
Wow. So do you think this is messed up, the US economy?
Look, I think that the beauty of capitalism is that there is no one model. It gives you freedom.
Right.
And this is the American way.
American way of capitalism.
The American way is, the best baseball player in the world, Mr. Shohei Ohtani,
yes.
right?
He happens to
He
Japanese.
does not play in Japan.
That's true.
He plays in the United States, you know, because America offers a significantly higher reward for that performance. So I think, you know, again, is it good or bad? I have my personal opinion, but from an investor perspective, right? The key question is every system has its sticks and carrots. Every system has its checks and balances, right? Do I personally think that America has gone a little bit bizarre, you know, a little bit overwhelmed, this winner takes all society in America? Is that the way society should go? I doubt it, right? But is it a system? Yes, it is a system. The Japanese system, as you can see, and this is again, change happens at the margin.
Right.
And what you see is that, you know, basically, you know, 20 years ago, you know, Japanese CEOs on average got about 70 times, right? Now they're getting 110 times. So the structure of incentives, of positive incentives, has actually started to improve. And this comes back to my overarching point, why should you invest in Japan right now? Because the metabolism is picking up, the incentives are picking up. If you do have, you know, mid-career people in their 30s and 40s changing jobs because they can get a 12, 13, 14% higher pay rise, that is happening, the metabolism is picking up. That's why I think the future of Japan is very, very bright.
I want to ask you from an investor's point, because it's true that Japan, the country as a whole, we respect the middle class. And sometimes even the government interferes to keep the purchasing power of middle class. So is that a good thing for an investor?
This is the sort of dark side of Japan's capitalism, which is that, you know, a lot of companies that shouldn't be in business are being supported with government support. It's kind of what we saw in the world during COVID, everywhere, even in the United States, right? But you see that Japan is the world champion of government support. And you can see this when you look at, you know, let's call them zombie companies, right? So of Japanese companies, you actually find that around 12% of all companies cannot cover their interest expense, so the cost of their debt, they cannot cover it out of profits.
Okay.
So technically they are bankrupt.
So they're like a living debt.
They're the living debt, and remember in Japan the cost of debt is basically nil.
Right.
So this is, oh my God, and you can see that structurally, you know, this has actually increased. So the Japanese government, you know, at some point in the 2000s, made a decision. There was actually, you know, the LDP, the ruling government party, they called for a moratorium on bankruptcies. And, you know, this is what this looks like. I mean, again, sorry to use this chart, but it's actually one of my favorite ones. This looks at Japanese bankruptcies. And look, capitalism is about freedom, but with that freedom comes the responsibility of creating returns, of creating profitability. And if you don't create returns, if you don't create profitability, then you're going to have to call it quits, right? And move on to do the next thing, right? Now, when you look at creative destruction, is it actually happening here in Japan, right? Look at bankruptcies since the 1960s, right? This goes all the way back. And you see that during the period of super high economic growth, right? The 60s and the 70s, you see that bankruptcies actually increased. Right? Even though the economy was doing well. Bankruptcies then, we had the bubble economy in the late 1980s. And bankruptcies collapsed because the bubble lifted all boats, right? And then the bubble collapsed, and you see that bankruptcies initially actually started to rise, which is what you would expect, right? But then, since 2000, you actually see that bankruptcies started to decline. And this was all this government support that was put in. And it's been in place for 20 years.
Wow.
It's like COVID was a one-off emergency. Thank God it finished, right? So governments withdraw their support. In Japan, we've had basically 20 years of government support.
And it continued.
And this is the big interesting thing. Again, you can see at the end there now, right? You actually see that over the last year and a half, bankruptcies have started to pick up, which is again a good sign, right? which is why, by the way, people don't like economists, because, you know, the bad have to die, okay. Right? Sure. Bankruptcies, you know, obviously there's human cost that comes with it. Right. I completely understand that. But from an economic perspective, the bad companies need to go bankrupt to create room for the efficient companies to actually, you know, gain market share, to hire those engineers, to hire those people. And I think over the next, you know, 2 or 3 years, the key issue of bankruptcy is actually being allowed to increase, right? Mm-hmm. The government life support system actually being taken away, that I think is going to be a big part, freeing up resources, right, to actually allow for better economic growth. Because if you work for a bankrupt company, number one, you don't get paid very much. No. You certainly will not get a bonus. No. Number two, your mood is going to be terrible because you know that the company isn't going anywhere.
And sometimes depressed, yeah.
Yeah, and the moment you actually go bankrupt, i.e. get laid off, now you're going to have to start to look for a job. Mm-hmm. Now Japan is in a situation where the jobs are scarce, so you will find a job that possibly is going to pay more, that is with a company that actually has a future. You know, and from that perspective, you're actually starting a virtuous cycle in Japan.
So the zombies will be kicked out.
So the zombies, this ultimately, as somebody who's lived in Japan for, you know, 40 years, you know, as somebody who thinks that Japan is a model of capitalism that works, right, and deserves to be copied and studied, you know, much, much more closely. You know, the interesting thing is that, you know, this clogging of the entire market by the zombie companies, if that starts to go away, you will get tremendously positive economic growth, right?
Let's talk about the positive side, because the middle class in the United States, basically it collapsed, which led to political divides and confusion in the presidential election. So what's the strengths of Japan having people power?
When you look at the distribution of wealth, right? In America, big problem, winner takes all. You know, and you actually find that the top 1% own about 34% of the entire wealth of the economy. In Japan, it's 20%, right? Much, much more equitable. And you do actually find that, you know, with this equitable, with this middle class still being real, that as a result of that, you know, society is much, much more stable, right? You can actually, you know, if you look at, you know, this data here on social problems, right? You see, you know, create an index, you know, mathematics literacy. I mean, Japan is always in the top 3 in the world in terms of mathematics.
A 12-year-old knows calculus. So,
exactly. You know, obesity, drug addiction, right? Sure. You know, all these different issues there. And you plot that against income inequality, right? So the gap between the rich and the poor. You see that actually Japan is number 1.
So less problems and less inequality.
Japan is the most successful, you know, economic model from a social and economic balance perspective in the world. And by the way, you know, we can have a little fun. You know, I was once invited to, when President Trump was in the White House, I was invited to make a presentation on Japan, and I showed this chart.
Oh, you showed this chart, okay.
And the people in the room went, "Yes, go America!" Top right-hand corner.
Okay, that's a funny joke. Okay, so I understand Japan has a very good middle class. So why does that make an investor want to invest in Japan?
So it's interesting, right? Again, from an investor perspective, the number one thing that you need to care about is whether the company has a strategy to generate profit growth, to generate earnings growth. So the direct connection, right, between the demographics and the opportunities from the demographics, right, the pickup in labor mobility, you know, the direct connection isn't there, right? But if I have a frozen labor market where the good stay stuck in bad companies, right? Then the probability of, even if you and I have a great strategy of actually being able to hire the talent that gets us into that level, right, is obviously much, much lower, right? While if I've got labor mobility, right? Now you actually have a higher probability of success to be able to poach that top engineer, to be able to poach that top salesperson. And I can tell you again, in the real world, I mean, when I was working for JP Morgan, right? It took us almost 2 years to hire a top analyst from Nomura or from Mitsubishi. 2 years of nemawashi. It's like, come on, this is JP Morgan.
Nemawashi's negotiation, behind the scenes negotiation.
2 years of negotiation of like saying, look, you know, we offer you more pay. You know, we are a much better company because we are global. It's the #1 bank in the world. But still, they would be very, very reluctant to move.
Why? It's so obvious.
Because it's a foreign company and it could go bankrupt.
Okay. But that's changing.
Again, the young generation is #1 in high demand. #2, the young generation has seen the baby boom generation fail. Because over the last 30 years, right, I mean, you know, conditions in Japan, right, were not very good. The only jobs that were being offered were part-time jobs or contract jobs, right? That has actually strengthened. The younger generation no longer just accepts what their senpai, what their seniors tell them. They actually take matters into their own hand.
Some people argue that Japan has not invented anything since, I don't know, Walkman. Do you agree?
It is interesting. I think the answer is, look, let's just look at the realities. Who invented the QR code? Who invented
Japan.
Velcro?
Japan.
You know, I'm German, as you can gather from my accent. I mean, when Toyota launched Lexus, 30 years ago, right? The Germans all laughed and said, there's no way that the Japanese will be able to own, to dominate, to even compete in the luxury car segment. And here we are, one generation later, and Lexus is more respected than Mercedes-Benz, for all intents and purposes.
Even you think so, even you're German.
Well,
okay.
This is a slightly touchy subject.
Okay.
No, but again, I mean, this idea, right? That the Japanese are not inventive, that the Japanese are not creative, right? Is obviously out there. But when you actually look behind the hood, right? I mean, you look even at your little pad here, right? I make a bet with you that more than half of the components are made by Japanese companies and can only be made by Japanese companies, because if you want that top precision level, right, then you have to go to a Japanese components maker. What is very true is that, the Japanese have been very slow to adopt, right, particularly digital technology, right? And that's a complex question for why that is the case. From an economist perspective, the single easiest answer is the reality that the service sector has actually not invested in productive capital. And that's because labor has been so cheap over the last 30 years, right? So it was ironic in the United States, for example, you always try and run as lean as possible, on your labor front. In Japan, because labor was very cheap during the 1990s with the reforms in the labor market, that as a result of that, Japanese companies are actually underinvested. Because, yes, during the 1990s, there was excess people available, right? And now this has changed. Now there's a shortage of people.
It's a complete opposite. Okay.
Now we've got a war for talent. And as a result of that, everything starts to change. And I think as a result of that, you will actually find Japanese service sector companies, beginning to invest more in better machinery, better IT systems, etc. I mean, just look at the change. As you remember, even you go into a Japanese convenience store now, even as little as 2 years ago, right, there were no automatic checkout counters. Now they are everywhere. So the change will happen, much, much faster than people are prepared to admit.
Show me the graph of Pokemon Go.
So this is interesting, right? I mean, this is, you know, I use this sort of, if you really step back and say, well, what are the global problems, right? And everybody has their opinion, everybody has their favorite little thing, right? But if you step back, right, one of the big things that has changed is the way information and communication has actually been, you know, accelerating. And look at this, you know, it took, when the telephone was invented, it took 50 years to reach 50 million users. When the TV was invented, 22 years, right? The internet, 7 years, right? WeChat, 12 months. ChatGPT actually took 38 days, right? Pokemon Go, 19 days.
Okay.
But the point I'm trying to make, right, is that, you know, the way information is being disseminated, which means the way you and I as a business person can actually attract customers, reach out to customers, that has accelerated at such a fast speed, right? And as a result of that, yes, we've got information overload. As a result of that, everybody hopes to get some filter. You know, to sort me. Tell me what's important.
Yeah, the fake news and all the...
Tell me what's important, you know, because the filtering has become so difficult, right? Because the information overload is so real, right? So it's interesting. I mean, people say data has become the new oil, right? But I mean, the problem is that there is a glut of oil and we are drowning in it because all I really want, I don't want oil, I want just one little glass of very delicious sake.
Okay. So Jesper, we need to wrap up. So I'll go back to my first question, why people should invest in Japan. Let's say this is an elevator and I'm a US investor and we only have, let's say, 30 seconds. What's your final comment? Should we invest in Japan?
The key point is that, you know, Japanese companies are cheap and there is new CEO leadership, a new generation of leaders that actually want to outcompete. And you're seeing this. Japan just built, you know, the world's most advanced semiconductor factory down in Kumamoto. Normally, it takes 36 months to build such a factory. In Japan, it took 22 months. World record, young generation of leaders, they want to get it done, they are ambitious. Buy Japan.
I'm convinced. Okay, so Jesper Koll, thanks for joining our show.
Thank you.